IPOs in India have always attracted a lot of investors. For example, the recent listing of Burger King was at a listing gain of 130%. It means those who invested Rs 15,000 in Burger King saw their investment value jump to Rs 34,500, giving Rs 19,500 on the first day as profit. That's more than double the return. Similarly, Happiest Mind gained 111% on the first day. So those who got the shares of the IPO were sitting on 111% profit on the first day. Likewise, Camcom Specialty Chemical was listed at a premium of 115% over its issue price. Rosari Biotech started the first trading day with a whopping 57.65% premium over its IPO price. Route Mobile was listed at 104.86% premium over its issue price. Naturally, this is easy money. But it is important to understand that not every IPO would be listed at such high premiums. There can be a case where the IPO gets listed at lower than the offered price, giving negative return. Naturally, you would like to invest in those companies where you can get high listing gain. And you would want to avoid companies that might not give a good listing gain. Now the biggest question is how to identify if the company can generate good listing gains on the first day of listing. Hello everyone, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. In this video, I am going to tell you the secret to make quick easy money in an IPO. This video is a part of new series Let's Learn Investment that I have recently started. I am also doing two more series. One series is on stock fundamental analysis where I pick one stock per week. In addition to this, I have also started a stock comparison series where I compare potential companies in similar business. In case you want to learn everything about money management, you can also explore my video course on everything about money management. Alright, let's come back to this video where I will show you how to shortlist a potential IPO for quick gain. Let's get started. So there are two options to decide if the company can give good listing gain or not. The first option is to do the detailed analysis of the company where you understand the business of the company, its competitive strength, key risk, future growth prospect of the industry and the company, and finally you check the financials including the historical growth, profitability and valuations. But that requires a lot of time, energy and knowledge. Now what if I tell you that you can decide within 5 minutes if the company would give a good listing gain or not? Guys, I am serious. You can actually identify in just 5 minutes whether the company would give good listing gains or not. You just need to do 3 steps. So let's look at each step. Check the grey market premium of the company. Companies with a good premium in the grey market would give good listing gains. For example, the grey market premium of Burger King was 85%, which means Burger King price was trading at 85% profit before the IPO listing. And what was the result on listing day? It was launched at the premium of 130%. Now what is grey market premium? A grey market is a place where a company shares are bid and offered by traders unofficially. This takes place before the shares are even listed or issued by the company on an initial public offering. So it is an unofficial market. Please note that it is not illegal, it is completely legal. Since this is an unofficial market, there are no rules and regulations. Market regulators like SEBI are not involved in these transactions. So the first step would be to check the grey market premium. You can simply Google the name of the company and use the keyword grey market premium and you will get the details. For example, if you simply search Burger King grey market premium, then you will get various links. So you can click on the various links and see the grey market premium. For example, if you click on this, you can just scroll down and you can see that it says that as expected the price band is fixed at 59 to 60. So we can expect a good grey market premium for the IPO. The grey market started with a good note around 28 to 30 and going up and settled around 40 to 45 level. Likewise, there is Indigo Paint IPO that is in progress. So if you just search Indigo Paint grey market premium, you can see various links. So you can click on that link. You can see it says Indigo Paint share were commanding a grey market premium of rupees 895 to 900 or 60% at rupees 2390 a piece over the issue price. Check the brokerage house's report. Now there are many brokerage houses that suggest if you should subscribe to the IPO or not. You just need to search the company name and use keywords like brokerage house report. Or you can be even specific. For example, some of the common brokerage houses include Motilal Oswal, ICICI Security, Anand Rathi, Angel Broking, IIFL, etc. So you can type the company name followed with the brokerage house name. These are the companies that do the in-depth analysis and provide recommendation. If majority of brokerage house suggest a buy, then there are high chances for the listing gain. If you simply search Burger King, IPO, broker report, then you will get various links. So you can scroll down and see, for example here, in this particular Economic Times article, if you click on this, you will see various brokerage house recommendation. For example, Anand Rathi has said subscribe, ICICI Security said subscribe. Likewise, you've got various brokerage house recommendation like Choice Broking, Prabhudas Leeladhar, Geojit Financial Services, KR Choksey, etc. Now this is the final step you need to do where you can check the subscription status during the 3 days of IPO application. So normally, if the company is expected to do well, there would be a good subscription on the first day itself. You will get 3 days to apply for the IPO. So you can invest on the second or the third day on the basis of IPO subscription status. The more the subscription, the better would be the listing gain chances. Again, you can simply Google the company name followed by the keyword IPO subscription status and you will get the details. So if you simply Google, let's say Happiest Mind IPO subscription status, then you can see various links. Now if you scroll down, you can read Happiest Mind IPO subscribed over 150 times. Likewise, you can search, let's say, Indigo Paints IPO subscription. And if you scroll down, you can see that it says Indigo Paint IPO subscribed over 50 times so far on final day. So if we conclude, for the IPO to give potential listing gain, it should have a high grey market premium, subscribe rating from multiple brokerage houses, and finally, high subscription during the 3 days of IPO application. Guys, there are many potential companies lined up for the IPO in 2021. Some of the potential names include Zomato, Delivery, Policybazaar, Flipkart, Freshworks, Nykaa, etc. So next time you apply for the IPO, make sure that you apply these 3 steps that we discussed in the video. But there is only one problem. If an IPO has a high grey market premium and multiple subscription calls from various brokerage houses, there will be multi-fold subscription for the IPO during the 3 days of application window. And in that case, it would be a lottery system. So higher the subscription, lower would be the probability of you getting the allotment. But there is no harm in trying the luck, isn't it? By the way, if any one of you know the secret formula to get the allotment lottery in case of multiple times subscription, then please share it in the comment box. And did you make a good profit in previous IPO allotment? Do let me know in the comment box. Finally, please note that this formula is only to identify the IPOs with potential listing gain. It is not for the long-term investment. For long-term investment, you need to do the fundamental analysis. And this video is only for educational purpose. Please consult your financial advisor before investing your money. And also let me know what topic do you want me to cover in this series on Let's Learn Investment.